Hello. Despite having rules, they're not enough on their own. Despite having a system, it's not enough on its own. The psychology of trading will intersect with risk management, trade management, money management, and it intersects through the points of fear, greed, shame, pride, etc. And all of these exist inside the self. But the self is nearly invisible. So, how do you become aware of yourself? Becoming aware of this will help you win at trading. My name is Rocky. Welcome to the show. It's good to see everybody. And if you are new here, seeing this for the first time, then great. It's fantastic to have you. Drop a comment down below the video so we can introduce ourselves to each other. I've been trading for the last 15 years or so, been teaching people about trading in our community for the last 3 years here and through YouTube 3 and a bit now. So come along, join us, be a part of all of what we're doing here, and we'd certainly love to have you. This is the third or fourth of this series that I'm doing just now on trading, and hopefully they're really helping people. So get ready to take part in the show by watching along, and that might mean that you need to rush off and take a wee or boil the kettle. So I'll give you a couple of minutes to get all of that done as people arrive and settle in to the show, and we'll be kicking it off quite soon. And you'll see when we kick it all off, I'll shrunk my video down a wee bit of myself here. So probably. So that'll maybe be a way that you can tell if you're standing slightly away from your screen. So get all that sorted just now. Make yourselves comfortable, because that's what we're going to be doing very soon, very shortly, getting it all kicked off. And just again, quick welcome to everybody who is new here. This is a channel for traders, people who've actually got skin in the game and trade for a living, and those who want to trade for a living. Okay, so if you're serious about trading, then this is maybe your new home. Welcome. You've finally found a place. We'll be just as serious about you as you are about trading. So there's a lot of people in this community whom I'm very, very, very serious about. And we really do help rise each other up. Stick through to the end of this show today, because it won't last very long. You will definitely get something out of it, and I'll be including easy, helpful, useful lessons for you, and making them accessible to you. I'll be using some, so I've got some notes kind of put together for this as well, and I will eventually make the notes associated with this series available through the Discord, so do be a member of that, discord.gg/Rocky Outcrop. Okay, so you must have boiled your kettles by now and got yourselves somewhat comfortable. Let me know if you are comfortable. Put an emoji in the chat. Any emoji will do. An emoji in the live chat box. Of course, if you're watching this later on in recorded mode, pre-recorded, what we're recording it live now for you later. If you're watching this recorded, you won't be able to take part in the live chat, but if you are there, drop an emoji in to let me know that you're ready to get going, and we will get the show on the road. I have the live chat open here so I can see it beside me. Gumbercules is ready to go. That's good to see you there. So a couple more people, give me the emoji in the chat and we'll kick the show off. Okie dokie. Remember, do hit like, and if you're enjoying this content, then make sure you subscribe to the channel, because I've got a heck of a lot of educational content on here that shall help make you a better trader. That's what I promise to deliver to you with these shows. Every time that you tune in, then you get something to take away from it. It's like the best thing since sliced bread. So I always promise to meet you halfway on this. So just by you watching along with the show here, you will get some benefit from it. All I really ask in return is that you do something like hit the like and subscribe if you haven't already. Bring a friend as well, because remember, a friend of yours is a friend of all of ours. So today's chat is about awareness and helping you become more aware, right? I started off by saying that there's a number of things which intersect from the world of psychology with trading and the trading and psychology of trading markets, and they intersect through the things like trade management, risk management, money management, all the things that happen when you're in a trade. It also intersects through the planning, the process that leads up to being to taking a trade. It'll intersect through the analysis stage as well. Just before you've actually even begun to plan the trade that you're taking, when you're looking for a trade to take, and then it begins even before you start your day. It begins with how you're feeling that day. It begins with how you slept the night before. It begins on how you left off yesterday's trading day. So as I welcome everybody to the show today, then I hope you've all had a good day trading. If you have been trading today, remember you should set yourself rules, and one of those rules could be not to trade on days where you're feeling under the weather, etc. So if that applies to you and you've not been trading today, then I hope you feel better soon and get back up on the horse. Or if some other reason why you've not been trading, it could be that you don't like to trade in and around the week of inflation data coming out. So we've got inflation data that's come out in America this week, and in Europe, etc. So it could be that that's one of your rules, and that was what we talked about in the first of these little lectures, presentations, classes, courses, coaching sessions that we're doing together. And we also talked about becoming uncomfortable, or becoming comfortable with being uncomfortable, and went through that in quite a bit of detail yesterday, in the last week, on the show. So you might have spent some time since we last spoke being uncomfortable, practicing that. And if you've done anything to kind of build on your ability to be comfortable while being uncomfortable over the last week, drop a number 1 in the chat box to see if that's happened. And if you've not done anything, you've not taken any action since last week, go ahead, be honest, put in a number 2, and we'll see some numbers coming through and see if anybody's actually acted off the back of the lesson last week. So drop that in the chat there so we can all see what's going on with each other as well. Has anybody been taking part in taking these lessons into their own trading or not? It could be any number of things. It could be that it could be in terms of doing more trading drills. It could be that you were doing more analysis using different indicators or different techniques, and it could be that you were looking at different markets, or looking at futures or commodities or forex or something like that, and just kind of stretching, practicing, and putting yourself in situations where you feel just a little bit uncomfortable, that you're not right in your comfort zone, so that when you go back into your comfort zone, that you have got you've sort of had that fitness exercise, and you're able to get more out of your comfort zone. But also your comfort zone itself will start to grow and be bigger, and as you grow your comfort zone, you're shrinking down that fear zone that exists outside of your kind of your discomfort zone. Because if you think of it like a gradient, go from comfort to discomfort to actual fear and too much overwhelmingness. So what we're trying to do here is push out that comfort zone. So I'm seeing some 1s in there. That's cool. Excellent. Bait Bucket says he's Zen. TradeSpot, he's done it as well. Nice shout out to TradeSpot. By the way, this t-shirt here, which I'm wearing, if you like the look of it and you want to get one of these t-shirts for yourself, then you can over at unreasonable.shop, TradeSpotting's merch store. We're seeing a few other people put in 1 in here as well, so that's excellent. Good to see that from Hans Dampf, for instance, and president of the TradeSpotting fan club. So hopefully what we'll do in this show is have enough time to get all the way round to talking about a lesson which happened in the Discord recently. If you're not a member there, then of course go join it. There's a free side which you can join at discord.gg/rockyoutcrop, and there are paid upgrade membership areas to the Discord as well, which are available through my Patreon. And I might take us over there at the end of the show to give you a lesson and discuss real life stuff from real traders in a real community, where we talk about these things to help kind of broaden out your knowledge. So welcome to the show, everybody. Thanks very much for joining me. And as you can see here, I've shrunk myself down to let everybody know that's standing slightly further away from the TV that we are here for the show right now, right? Welcome to it. Today, it's all about awareness and how will you become more aware? Because we know that the biggest detriment or success factor in your trading is actually outside of the technical analysis, it's outside of the system, and it is within you yourself, because your psychology and your understanding of the psychology that exists within the markets, and then the way that those two factors interface with each other, is often the thing which will determine whether or not you are successful or not. And by often, I mean really what we see in the trading game time after time is that those who are successful have a working relationship with themselves, and those who are unsuccessful haven't yet achieved that. It's probably the single biggest denominating factor, and that's what we're here to talk about today, or at least that's kind of what this series is about. But specifically today, we're going to be talking about you and your self-awareness. It's not just my idea. Stand on the shoulders of giants over here. We can look at what Louise Bedford said when she said the biggest challenge in trading is you, not the markets. We can refer to Mark Douglas, who said trading is not about being right, it's about being profitable. We can look to Jesse Livermore, who said the only way to make money in trading is by not losing it. We can look at what George Soros says, and he said it's not whether you are right or wrong that's important, but how much money that you make when you're right and how much money you lose when you are wrong. And we've been talking about these things quite a bit recently on my Twitter page as well. So if you're not following me on Twitter yet, then do go over to twitter.com/Rocky_outcrop and make sure that it's definitely me that you're following and not one of my many impersonators, and give us a follow over on Twitter, because I put out good quality tweets every single day. And that George Soros one I just told you about there was one that I tweeted about quite recently. Paul Tudor Jones, often called one of the greatest living traders, is said to be a successful trader you must learn to control your emotions. He'll actually recommend to people who join him in his firm that you should read the book by Lefebvre called Reminiscences of a Stock Operator. And it's all about that Jesse Livermore guy, the one that said the only way to make money in trading is not by losing it. And he calls it the Bible, as we all do, really, who are traders. And he makes sure every new hire reads it. So that's something you might want to read if you're looking for some extra sort of curricular reading. And it'll give you a lot of keen insights into really the mind of a successful trader. I want to point out here, before we move past all those different names, the fact that all of those different people were very, very, very different in their approaches to trading, and that trading isn't about following in one particular person's footsteps, but it's more to do with whether or not you yourself are leaving clean footprints in the trail or not. You know, are you kind of walking on eggshells around your own personality, or have you fully embraced it and taken on the full weight of that responsibility? And are you leaving those of your own, making your own path and your own footprints? Because it really truly is about your intersection with yourself. But awareness is beyond just those things. You know, you want to be aware of not just yourself, but of several factors around you. Starting off though, and what we're focusing on today, is self-awareness. And if you want to talk about any of these other things that I'm bringing up just now, then be sure to leave a comment below this video in the actual comments thing, so I can see it later on after the live show and all that, to let me know what you'd like to talk about more and in more detail. And of course, I've asked people in the last few episodes as well to do the same thing. And if you have got an idea from one of those previous ones or this, then let me know and we'll expand on one of those topics in a future episode. Self-awareness, which we're going to be talking about today, is the ability to recognize and understand your own emotions, thoughts, and behaviors. It's an essential trait for traders, as it allows you to identify your biases and tendencies and to adjust your trading strategies accordingly. This is this idea about meshing your system and your rules with your personality, and that's why we've talked about rules and put a lot of time into talking about that in this first episode of this series. You're also going to want to be aware of the market. You need a good degree of market awareness. Just make sure I've got this for you to see here. So you're going to want to be aware of the market. You're going to need a good degree of market awareness. Being aware of the market and its movements is crucial for success. It includes keeping an eye on economic data, geopolitical events, market sentiment, and it's important to be aware of political risks and opportunities in the market. Political? I said political. Well, there are occasionally political risks. I meant potential risks in the and opportunities in the market. Being aware of the bigger picture, that's so to speak, really, you know, and it's not just the conditions that your particular equity, index, commodity, forex pairing are displaying on the charts themselves, but just to be aware of the surrounding issues. You know, for instance, you might have had a great buy signal on Russian banks in February 2020, but knowing that we were in the running up to massive geopolitical risk over there in Russia would have served you very well whenever they caused the big black swan event by invading Ukraine. So, like, you know, just being aware of what's going on around about you is very important. You're going to also want to have a good skill at technical analysis. I think it's a fundamental skill of a trader is technical analysis. We've got a course which will tell you all about technical analysis, bring you from zero to hero on that front, absolutely. So anyway, just a brief one for anybody who's watching along who doesn't really know what I mean by that. Technical analysis is the study of past market data to identify trends and patterns. Useful tool for traders to identify potential opportunities and make informed decisions. Successful traders use technical analysis to stay aware of market trends and potential changes in sentiment. And so the above point about market awareness, usually that does get fed into the market. So most news becomes irrelevant and expired, you know, essentially in terms of how it's going to impact the market once it's been interpreted by the market. So you're going to have, and once it's out there and freely available, then normally, you know, the bulk of whatever moves coming as a result of that news will have already happened on the charts. So, you know, just to feed that back the way, you might find something from your technical analysis which makes you think to yourself, hey, hold on a second, I should increase my awareness to the bigger picture and see if there's any news or something kind of related to this that might have caused what I'm seeing on the charts. And of course, it might already be baked in. You're going to also want to be aware of fundamental analysis. You know, if you're looking at things like stocks, then you're looking at things like balance sheets and what sort of warrants maybe even exist on the company. But you'll also be looking at it in terms of cryptocurrencies, the fundamental analysis to do with the team, the on-chain data that you might find. You might also do fundamental analysis when you're looking at forex pairings, kind of getting a bit more stuck into that geopolitical dynamic that exists out there, the global dynamic and the balance of the wealth between the nations. And you also then want to be aware of news and events. And like I say, news can obviously affect fundamental analysis as well as it can affect technical analysis. You know, you might have the news, for instance, like for XPENG, a Chinese electric vehicle maker that's going to be coming out soon enough, will be their Q4 earnings, which will be quite bad. Now, one of the reasons that they'll be quite bad is because they'll have had much fewer deliveries and fewer sales in that period than they would have otherwise have had, perhaps, had they not had a launch of two new vehicles. So the G9 SUV and the P7i are coming out soon. So this is just, you know, not to give anybody information about a specific company, but this is just information that I know is about this company. I'm aware of the news that's come out recently with regards to the launch just last week of the P7i. I'd be then aware of how that would maybe affect the demand on current orders. I'm aware of the news in China that the subsidy for buying electric vehicles was removed, so that there's going to be extra pressure on their balance sheet as they push towards delivering a better range of vehicles to get through this transitionary period. And, you know, this is just the things which I'm aware of and the events coming up and where we are in that news cycle. I'm kind of aware of that as I'm taking trades on this company. So traders need to stay aware of important news releases and events that could potentially impact the market. So you might have unexpected economic data being released, and that could prompt a significant move. And that's slightly different to the idea of earnings and the release of a new vehicle. That would be the third sort of third type of news, which would be this unexpected news. So you want to have an ability to be aware of these things and the muscles that you use to extend your awareness out into these different arenas should be well trained. But, you know, what we're going to be talking about in a minute or two is just diving a bit more into the ideas of being self-aware. Another thing that you're going to want to be aware of is price levels and sort of key price levels, and it's going to give you an awareness, to be able to anticipate moves in the market, but also how those price levels might affect your own emotions, right? And how they might affect your own psychology and the psychology within the market of other participants. Price breaking past a key level is normally a big signal for people, whether they're going short or long on that particular product, is going to be a big psychological impact whenever the breakout happens as well, and how things will then evolve from that point. Going back for a retest of the level it broke out from, for instance, will also have a big impact on psychology and on your psychology, and the way that you would be trading will have to adjust live in real time with the price itself moving. So I think that being aware in advance, it's no use. For instance, 3M hit MMM, Triple M, 3M, the guys that make the glue that goes on stuff everywhere, tape and all sorts of things, plastic, floppy disks, anything. 3M, I was trading that recently, and I was aware that the price could get drawn into a gravity well of the round number, the big number of 100 of 100 pennies. It's a UK traded stock, I think, so it would be £1, I think, is the thing. But it was 100 was the headline number, and it was trading at 106 just yesterday, and or so. And I says, well, I'd be happy enough to cut my trade if we drop down below 106 towards that 100 level, because the gravity, the round number, but also would be very keenly aware of what could happen at that round number area, and if we might get a bounce from there, etc. So I was aware of the prices around about where we were, the historical price levels, where potential breakouts could happen, where a trend change could happen. And as it went into lower lows here, they're not all-time lows, but there's a significant low spanning back over the last sort of 10 years, really. You'd look at this as it being a big low. I'm looking at that round number of 100 and saying, how is that going to also have an impact? So price levels are super important. And this could also then give you an awareness of the sentiment within the market. If you're aware about being certain areas, like for instance as well, you could be aware that you're in the bottom 20% value of the stock compared to its historical pricing, and that might give you an extra awareness of how the market sentiment has been running into this situation, and how things might operate as well if they were to break out, whether you're going for all-time highs, are you trending? Because if I just show you a chart real quickly, here's SPY, and just looking back at this, it does carry us back as far as 2021 here on the charts, back as far as August 2021, and we know that if we were to see a breakout up above the 417, 420 sort of area we're talking about on SPY, SPX, the big index of the S&P 500 companies in the USA, we know that we'd be operating not at all-time highs. Also, though, you can't see on this chart, if we were to break down below 345, this wouldn't be all-time lows, and it might be, you're able to just quickly and easily assess the context of where you're trading before you then go and zoom in closer to the areas where you're actually taking your trades at. And that's something that's very necessary, and it's just a part of this overall awareness, and it'll give you clue you in for psychology as well with regards to the market, which is the next point here. Market psychology refers to the collective emotions and behaviors of traders and investors in the market. Being aware of market psychology can help traders anticipate potential market movements, make informed trading decisions. So obviously it's very important to be aware of that, and was discussing that in great detail with regards to price levels, but you also want to know about the awareness of other factors such as the news and events and so on. The overall awareness in general is a crucial aspect of trading, and successful traders need to stay aware of both their own emotions and behaviors as well as the market trends and movements that could impact their trades. So it's just like Plato said, know thyself, and you're going to find that if you do know yourself, that you've got a far better handle on the market psychology as well, because by knowing yourself, you'll know at least, a chunk of what the market thinks like, because typically speaking, although we all feel unique and everything, we tend to kind of fit into certain boxes. So stay tuned to the end, and I'll give you 4 easy boxes that you might fit into, which can help you kind of get a little bit of a better handle on where you are, and maybe an idea about how the other participants in the markets might be, and round off your experience or your kind of your knowledge of yourself as you start to kind of try and figure out a bit more about who you are. And by the way, to everybody as well, important to point out that knowing yourself is something which takes a long time and which all people need to work at all of the time. So this lesson that I'm giving out today is something which is benefiting me too by giving it, and also a reminder, a refresher to me that I need to know these things too, and that it's something I need to constantly check in with. You know, obviously though, a lot of what we're talking about here is stuff that I've done in the past that is an ongoing and forever process. So hopefully experienced traders that are watching along here with the new traders can sort of stand side by side with each other and say, yes, we're both going through the same thing together, because you're always trying to learn to know yourself better. So the importance of self-awareness for traders. So it's a pleasure, by the way, to be here now live talking to traders out there. Just want to say a big thank you to everybody that tunes in to watch these shows. Really appreciate it. If you're a trader and you have taken a trade at any point in the last 7 days, then chuck a 1 in the chat box, just so everybody can know that we're watching along with people who have taken a trade in the last 7 days, who are actual traders who put real money in the markets, that this content is going out to them, so that people who come along and watch later on can see the people in the chat box and all of you guys help support and make this channel possible. All the members and everybody that's a member of Patreon or a member of my YouTube channel, you can join that by hitting the join button. Thanks so much to all of you. And you can see here in the chats, then we check that, yep, there's ones coming in now, that those people that support and make this all possible are of course traders themselves, and we're all going through all this together. So traders, it's a pleasure to be here on YouTube. Thanks for making it all possible with you, talking about the crucial importance of self-awareness in your work. Trading is a job. It's your job, and when you wake up in the morning and you start trading, you're going to have done a few things first, hopefully, like gone out for some fresh air, perhaps eaten a good meal, maybe done a bit of light exercise, whatever happens to be. And these are the things that you would need to be aware of to kind of give yourself the best chance every day, and set yourself up to help team you, so that tomorrow's version of you also has a good day because you took care of your health today and things like that. So, and it's crucially important to be self-aware in this job that we do. I believe success in trading, as with any field, depends largely on your ability to understand and manage yourself. So, self-awareness is a twofold thing. On the one hand, it's understanding yourself, and on the other, it's managing yourself. So there's going to be elements where you need to kind of compassionately and open-mindedly look at yourself and say, well, who am I? What is this? How am I? Me, for me, it's like, how is Rocky? How am I, me, myself, going to be in this situation? And how am I going to best manage that? Because I amn't my emotions, and I'm not my behaviors. I'm not, I'm a collection of all of these things together, not just one singular thing. So I'm going to need to be aware of all of that and manage myself. Thanks so much, by the way, to Goleman, who's just donated. It'll print out through the printer here in just a second. Beep, whoop. There we go. And I'll get round, and there's a notice up there, and I'll get round to looking at all of these messages that come through. And if anybody wants to support the channel, and thank you so much, we will take a quick look at charts at the very end of the show as well, if anybody has any technical analysis requests they'd like to get in. So it's a twofold thing. It's understanding yourself and managing yourself. Self-awareness is essential for traders. Just want to make sure that that's properly clear, actually. So the two key parts to this process are understanding and management. Management being the ongoing part of your current understanding. And self-awareness is essential for traders because it helps you to recognize your strengths and your weaknesses. By knowing oneself, a trader can identify emotional triggers and learn to control them. This is critical because trading can be an emotional roller coaster with extreme highs and lows, and it really will bring out all of the good and negative, all the positive and negative emotions that you feel in potentially even just happening over the course of just one single trade. You might go through the entire set of them, in which case Being aware of what emotional triggers you have, and then being able to control them, that is absolutely essential. And that's those two key things. So identifying your emotional triggers is understanding yourself, and management, it all comes under the field of controlling yourself, really. This is is critical because trading can be an emotional roller coaster with extreme highs and lows. Being able to remain calm and level-headed during these times is what separates successful traders from those who fail. And in addition, self-awareness can help traders by developing their own trading style. And every single one of you out there will have your own trading style. Use your own system. It'll be different from the next person. And even if two of you use the exact same system, it's going to come down to your engagement with that system and how that makes you feel. And over a long period of time, can have a whole sort of different effects. One of the turtle traders, a guy called Russell, who was a top backgammon player, left the turtle traders, and at the end of the process had been a part of that highly successful group that you might have heard of. There's a book, The Way of the Turtle, and it was a group of traders who was set up as kind of part of a test, if you like, sort of a bet between two really successful traders, to say whether or not they could just teach a group of people to be traders using a system. And they did, and they were a very successful group of traders. But the Russell guy, when he left at the end of it, he said, he really hated some of the parts of the system. He just, found it extremely difficult, and it didn't really fit very well with his personality. But because he was in that group and they were supporting each other and talking about it and sticking to this particular system themselves, he was able to manage through that. And being aware of the fact that he disliked this component of it made it so it was possible to get through the whole thing as well, as opposed to just simply, not knowing where the friction lay. And the thing for him was that they weren't really able to take profit on their trades. They needed to keep their winners open until such times as their system told them to close it. And that's all part of the system, and is the friction that was causing within that his own personality is something that he was very much aware of by the time he got to the end. But starting out, you're not necessarily aware of this. Over a long period of time, you're going to interact more and more and more with your system, and you might be changing it and finding that some parts do fit, some parts don't fit with you any longer, and they're not going to be static. That's going to change over time. By understanding your personality and tendencies, you can create a trading plan that suits you best. This means that you can identify the assets that you want to trade, the timeframes that you prefer, and the risk levels that suit you. It also makes you able to make informed decisions that align with your values and goals. And that's what you're going to want to get as a trader, is a system that works for you, so that you don't work for the system. Well, there's obviously a bit of give and take there. You're really going to need to know yourself and develop that self-awareness to be able to do that. So that's why self-awareness is important. Self-awareness also plays a crucial role in risk management. So traders who are not self-aware may take unnecessary risks or fail to recognize when a trade is going against them. By being aware of yourself, traders, you will be able to monitor your emotions and recognize when you are at risk of making an irrational decision. This might be the type of decision like, I'm going to move my stop. I open up this trade. I was very confident about it. I'm even more confident now that I've got all this emotional attachment to my trade, and I'm invested in this lovely thing that I love. It's my baby now, and I'm going to move my stop. I'm going to move my stop because I don't want to hurt this new thing that I've got as my baby, and it'll just be destroyed if it hits the stop, And then you move it, and then you suffer a big loss when really you had it all worked out in advance. So that would have been an irrational decision, and it could have come purely as an emotional outcome of some emotional thing, and it might exist inside you, or it might not, or it might exist inside you in the future while it doesn't exist today. So self-awareness is extremely crucial, so that you're able to avoid these mistakes. By being self-aware, you will be able to monitor your emotions and recognize when you are at risk of making an irrational decision. You can also recognize when you are experiencing a losing streak and take steps to manage your own risk. Now, trades, each individual trade isn't connected to the last trade. You know, that's not the way that it works. It's not the way that it works when you're flicking a coin. It's not the way that it works when you're trading. Nevertheless, you might have a rule that where you know that you make increasingly irrational decisions, or your ability to make decisions is diminished as a result of having taken losses without a break in between. Now, you might be of the mindset where you think that that whole idea of saying that is irrational, and that you would take a certain amount of trades every day, and that would be it anyway, that you will always take 5 trades if the opportunities are there, and if they're not there, you'll not trade. You know, it could be whatever works for you. But you will find that quite often people benefit from a system which means that they need to put the sort of the sword down, put the axe down for the day, and come back to chopping down trees tomorrow if something just isn't working out for them. Or it could be that that doesn't work for you, that system. It's all about your personality. In summary, then, self-awareness is essential for traders because it allows them to recognize their emotional triggers, right? It allows them to develop their own trading style and to manage their risk more effectively. And as Alain de Botton said, who's a good guy, I quite like him. I've got one of his books right here. This one's called The Pleasures and Sorrows of Work. And actually, I won... This isn't the copy that I won. I won a copy of this book, and he sent me a signed copy of it one time. So cheers for that, Alan. And so anyway, that's not it. I've got a hardback copy somewhere else. Knowing yourself is the beginning of all wisdom. And for traders, then, this wisdom can be the key to success in the market. So that's one from him. And that's a little summary of just where we are so far. And I want to just check in with the chat that you're following along and kind of getting something from the video. Let me know that you are. Drop a 1 in the chat if you're getting something out of this. What I'm really trying to reinforce with you and remind you of is the benefits of being self-aware, the need to be self-aware. Now, I can't make you self-aware. Okay, that's not something that I can do for you. I could stand up here and describe a million different personalities, but whether or not you became self-aware would only be if you were able to recognize what one of the personalities I was naming you actually were. So I'm not going to break down into extreme detail how you can go about knowing yourself a bit better, but I certainly will reinforce and emphasize with you the benefits of doing this, the costs of not doing it, and to show you that it is possible, and that there are kind of, you know, people out there who are doing this same activity as well all the time, and just really drive home the point that self-awareness is probably going to be the key to you unlocking your edge, because 2 traders trading with the same system can have radically different results and outcomes. People are not machines. Now, you can use algorithmic trading, but you're always going to have to then adjust and update your algorithmic trading based on how the markets are going. And you're going to be, and humans make machines, you know, so the outcome of what you make will be some way, at least, going to be derived from your personality, your own self-awareness, and how you've managed to reconcile that with what you've known about the market. So take all your knowledge about markets and reconcile that through the filter that is your own sense of perception, and that is yourself. And that's why self-awareness is important. If I put on a pair of glasses which have got a shaded lens on the front of them, so all the light that comes through is a certain color, then if I was unaware of that being there, I would make wrong decisions when it came to which items of food I ate, or what color wine I was drinking, for instance, you know. Whereas if I'm aware of what's happening, I can account for that and make better decisions. And that's what it is about understanding yourself, is understanding that lens that this information comes through, which is affecting you. And I can see an awful lot of ones in the chat there, so that's absolutely fantastic. And thanks, Homer, for being a member of the channel here for the last 8 months. Bing bong. Cheers, Rocky. You're a man. You're a gem among rocks. Hey, thanks so much. That's really appreciated. So I've done my little summary, and a couple of people, and these are indeed following along, so that's pretty good. This is all I've really got left here to read is this page, so you know this is what we're working through here. Like I say, this will be made available to people. We've been at this for 39 minutes now, so take off the 10 at the start. There's about half an hour, so people shouldn't feel too overwhelmed, but you've had a little second to grab, you know, a drink or whatever, and we'll just go on here and kind of bring home some more of these lessons now that have really got the train up and running. Let's take it into the station. At the heart of self-awareness is the ability to recognize our own biases, emotions, and tendencies. It can be tempting to believe that we are rational, objective beings, but in reality, we're deeply influenced by our own experiences, beliefs, and even our biology. In order to make sound decisions in the markets, we need to be aware of how our own biases and emotions might be affecting our thinking. One of the keys to self-awareness is being able to reflect on our own experiences and emotions. This means taking the time to think deeply about why we are feeling a certain way and what might be causing those feelings and how we can manage them in a productive way. So just to go over that there, it means to think about why we are feeling a certain way, what might be making us feel that way, and how we can manage that in a productive way. It also means being willing to accept our own limitations and weaknesses and seeking feedback from others to help us improve, which is why we have a community of traders here watching along today as part of the Discord and the wider community of the trading YouTube channel that we have here. So become a part of that if you're just new here, and of course refresh yourself with the community if you're a member of the Discord but haven't used it in a while, and so on, because we really do help each other improve. And hopefully I'll be able to bring in, it does look like we've got time for it, a lesson from the Discord that we had just the other day there. As the philosopher, I just got a message on my phone there, so rude of me. Do hit like, by the way, if you hadn't like on this video already, by the way, I would appreciate that. As a philosopher, Arthur Schopenhauer once said, this is a man who Jamie and I like to quote quite a bit, is the old Arthur Schopenhauer, and it's kind of how I've been talking about things recently. I've been talking about the team us. I would talk about team me, you know, team you, and how yesterday's you, today, the present you right here, and tomorrow's you, those three separate individual people all form your team, you know, and it's as one day hands the baton off to the next, that there's this team that constantly has to work together. You, as you are now, as a product of where you were yesterday, and the person who you're making tomorrow with your actions and activities today. So a big salute to everybody who's tuned into this show today, who's taken the steps today to give the tomorrow's version of you just that little bit of an edge over everybody else. So as Arthur Schopenhauer once said, man is the only animal who causes pain to himself with the pleasure of it. And I think this is a really important lesson to give people who are new or intermediate at trading, or indeed those experienced traders who wonder why they keep on making the same mistakes again and again, and that you're not alone out there in this phenomena of being the only animal on the planet who seems to be able to cause pain to himself with the pleasure of it. And it's like, just to be aware that, as Jamie Tradespot, that is, said in his whether or not trading is gambling video that he has on his channel, I highly recommend you check out, that that when you're suffering, that gamblers, the gambling trap, if you like, is that the emotions that you get when you win start to be released even when you're losing, and that you might find yourself chasing an emotional high while your intellectual side of your brain is telling yourself that you're chasing after profits in the market. And it could well be the case that you're not, that actually you're just chasing the thrill in the first place. And it's really important to understand exactly where on that spectrum you are. Thankfully, I'm quite low on that spectrum but I'm aware of my propensity to go up that spectrum rapidly should I start to make a series of bad mistakes. So this all comes together in terms of how I know myself. I know that from a natural point of view, I'm fairly low on the sort of that causing pain through the pleasure of the thrill-seeking aspect of trading. But also I know that if bad decisions start happening, that I'll rapidly ascend that scale, and that I would then be more likely to say, look, let's rationalize what we're doing here, take a step back, go back to basics, and or perhaps limit my position sizing, or even give up trading altogether for the day if I notice myself going into that pattern. It's especially true then to remember that phrase that Schopenhauer said, when in the world of trading, where the thrill of risk-taking can often cloud our judgment and lead us down a dangerous path. If you're able to cultivate self-awareness, then what you can actually get out of that is the ability to manage those impulses and to become more thoughtful, which will help you make rational decisions, and you will then therefore move yourself out of that chunk in the market, which we know that somewhere between 70 and 90% of all traders will lose all their money in the first 3 months or weeks of trading. That the market is always being fed by more and more and more new traders coming in who make the same mistakes as everybody who came before them made, before they ultimately give up the ghost and go on to try and do something else. What our job is to not make those mistakes. Now, we will benefit from the fact that more people will come into markets and make the mistakes that we have made in the past, and that we seek to not make and cut out of our trading game to become better and better at trading all the time. But our goal isn't to exploit that in others. It is to remove that from ourselves and to be able to manage and mitigate these things within ourselves. And in doing so, we will actually then get the byproduct of that, of making many more profits in the market as a result, regardless of who comes on the other side of it. Because really, if we think about this and what everything we're saying today here about self-awareness is, that the biggest competitor to you in the markets is yourself, and it's often in this element of seeking a thrill, which will give you a short-term dopamine or serotonin boost in your brain as you get the feedback that you get emotionally inside from having taken a thrill or a risk, at direct detriment to yourself. So you have to remember that your biggest competitor in this is yourself. The ancient Greek philosopher Plato also had a lot to say about the importance of self-awareness, and he believed that the key to living a fulfilling life was to know oneself, and that this knowledge required a great deal of introspection and self-reflection. For traders, for you guys, this means that taking the time to reflect on your own strengths and weaknesses, your goals and motivations, and the strategies that work best for you. So, in conclusion to that part of what we're talking about, I would like to urge all of you to make self-awareness a top priority. I'm just going to ask in the chat box if you are going to be doing that. Are you going to up the priority that you're giving this idea of self-awareness? That, you know, it might be something that exists on your list, like, I will become a good trader because I will learn about this technical thing, and I'll learn about this other strategy, and I'll learn about this other indicator, and I'll use these 2 or 3 risk management techniques, and I'll make sure that I'm healthy, and I'll make sure that I've slept well, and I'll make sure that I'm self-aware, and I'll make sure that I have my position sizing correct. Is it like that? Or it's just on a list? Or is it up there right at the very top saying, you know, the biggest, most important things for me as a trader to become more self-aware, and to then let that enhance all of the massive breadth of knowledge that you've already accumulated, and to learn more about yourself? Where is that existing for you out there in the world? Where is that existing for you? Where are you in the world of where do you find yourself in relation to how you perceive that importance. Because I urge you to lift it up a bit, raise up self-awareness in terms of your own priority list, and to work on that as a trader, because by working on this and knowing yourself a lot better, then you will become a better trader. That's why in the course that Jamie and I sell, to help you become a better trader, you will find that we mention this very, very early. You know, in the first 10 minutes of stuff that we're talking about, we specifically make mention of the fact that you need to know yourself. So really do urge you to do that, and to make it a skill as well. So to cultivate this skill, you can learn to manage your own biases and emotions. But I really want to underline that it is a skill, and that it's not something that you will be naturally able to do very well. I'm okay at it, and I'm working on getting better at it. I'm always trying to improve my skills of my own self-awareness so that I can better manage my bias and emotions, and then make better, more rational decisions and achieve greater success in the markets. As the Greek philosopher Socrates once said, the unexamined life is not worth living. And the same is true for trading. The unexamined trader is not likely to be a successful one. So that's the message I want to leave you with regards to becoming self-aware, that those out there of you who've experienced a success in markets so far without being self-aware, perhaps we're lucky. But in the long run, as you know, like Dr. Alexander Elder, we want to, of course, all trade for a living, and that's what I educate people to do here on the channel. As I myself trade for a living, is one of my key responsibilities to examine myself as a trader, and I do this through my reflection on my trading journal, and I do it through you know, kind of talking with other people. I'm very lucky to have a brother who knows me very well, who's also a trader. That's TradeSpotting in the chat there with you. So I'll leave you with a few extra points then from a couple of people who have spoken in the past, who are very well known for this, and you can go off and help, and if you want to read some of their stuff, then you absolutely can. So you might want to read, for instance, the book by a guy called Daniel Goleman, sorry, Goleman, Daniel Goleman, called Emotional Intelligence, where he says that self-awareness means having a deep understanding of one's emotions, strengths, weaknesses, needs, and drives. It includes an awareness of how one's emotions affect other people. And I would just change that sentence he says there to say, you know, so self-awareness means having a deep understanding of your emotions, your strengths, weaknesses, needs, and drives. 5 things there, and that it includes having an awareness of how your emotions affect your trading. Now, obviously your emotions will affect other people, and to be emotionally intelligent, you will obviously need to know how your emotions affect you as well as how they affect other people. It's no good being emotionally intelligent about other people and not knowing how emotions affect yourself. That's a bit lacking on the old intelligence. Same could be said about how it's no good being really aware of your own emotions, but how they affect other people. And it's the same thing then applies to trading. You know, there's no use in being very clued up on your own emotions and being very clued up on the market psychology and how the market responds to emotional stimulus without knowing how your emotions affect your trading. So this is a key thing here, and he spoke about it obviously with respect to other people. People who have developed emotional intelligence are better able to manage their own emotions, and they are more effective in managing the emotions of others. And again, I just kind of turn that into, you know, the people with emotional intelligence are capable of managing their own emotions and capable of managing the emotions in their trading. And if you've got high emotional intelligence, but you're not applying that consciously and mindfully towards your trading, then you're not making use of your high EQ, and you know that's no good. And and it's a skill. I think he very importantly points out as well that it's not something that you're born with. Emotional intelligence is not fixed at birth, said Daniel Goleman. We can develop our emotional intelligence throughout our lives. So whether you're starting now or you've got blessed with high emotional intelligence from being a young person, you know, you're not necessarily at a disadvantage compared to just your average human being, because your average, because it's not fixed at birth, and you can absolutely improve on it all the time. It's not like what people say about IQ and all this sort of stuff as well. I don't agree with it. I think that I agree with Daniel Goleman here. So I would say then the 4 areas that Daniel points out that you'd be skilled as an emotionally intelligent person are identifying your emotions, using emotions, understanding emotions, and regulating emotions. So you're going to want to improve on those 4 skills. That is using your emotions, understanding your emotions, regulating your emotions, and identifying your emotions. Starts with identifying, and then what you get out of it is going to be in terms of using and being able to process that information. That's understanding, and then being able to continually do this across time, over time, and then to get more of the useful emotions and to get less of the unuseful, the ones that diminish your trading ability, is to do with regulating your emotions. And then the 5 points as well that he said about it are strengths. That's cool. I read the 5 points out earlier anyway. And then I'd also then move on to just say as well that Carl Jung had a lot to say about self-awareness as well. His was a lot more poetic. So here's a good one from Carl Jung. Your vision will become clear only when you can look into your own heart. Who looks outside dreams. Who looks inside awakes. There we go. There's the poetic Jung. And telling you that, you know, that you need to be, if you're looking at trading, you're going to need to be able to look inside your own heart as well as when you're looking at the charts. It's charts and hearts for successful trading. The most terrifying thing is to accept oneself completely. The greatest and most important problems of life are all fundamentally insoluble. They can never be solved, but only outgrown. We cannot change anything until we accept it. Condemnation does not liberate, it oppresses. Okay, and this is a key thing for traders, that you need to be able to accept it. If you condemn it, you don't liberate it, and you don't free yourself of it, for sure. You only oppress it, and it's sure to come back to bite you again, as Carl Jung so eloquently points out. And knowing your own darkness is the best method for dealing with the darkness of other people. And that's, I think, really, you know, what trading is all about. Okay, so as Carl Jung puts it, How to Be a Good Trader by Carl Jung, knowing your own darkness is the best method for dealing with the darkness of other people. Just wanted to give a shout out to the chat here. Dimitrios Desmos, good to see you and amongst the chat. It's good to also see other people who are just bringing in in the cheap seats there. We've got Elegy, Dragonfly, Nova Scotian Unicorn. Good to see you folks. This video will be made members only soon, so if you want to watch this back again, make sure that you watch it soon, because it'll be made members only. There's Emily in the chat there as well. Good to see you, Emily. And who else have we got? Charlotte, good to see you, and KT. So plenty of folks out there who you know, you're benefiting by being here, because it will be members only, this video, come maybe tomorrow or the day after. So you're going to want to know, after all this talk about being self-aware, what type of person are you, and are there any kind of starting points going to give you anything to go away from? Because I know that when you watch something like this, oh, look at that, look how generous Goleman to Win is, gifting 5 outcrop memberships. That's great. I'll just let these alerts come through here and read out the names. You got KT, you got Jay Fern, you got Katie, you got Part-Time Player, you got Aaron Ewing. They've all been given memberships by Goleman to Win. How cool is that? Enjoy the playlists, folks. You've got a few good lessons already in this series I've been putting out here in my Wednesday coaching session videos on YouTube. So go back and watch the last ones of them if you haven't seen them already. And of course, you've got access to my education playlist, etc., on the membership side of my channel. So do check out the members only videos that I have, because there's lots and lots and lots of them. You can, like, you know, use the search box function and all that to get the most out of my videos, because there's something there for everybody, no matter what level of trader you are. So there's a few different people, a few different types of people, and I just wanted to give people something to go away with, because you want to be able to take something away from these lessons. And the last two major things that we've got to talk about in today's show are this little point just here to give you something that you can, you know, start to think on, to give you something to chew on over the next week as you're trying to figure out a bit more about yourself and become self-aware. And then to jump over to the Discord, where there was a discussion with regards to being self-aware and knowing yourself just yesterday in the Discord and the crypto section, which I'm going to point out because I think it's extremely valuable. I don't want to read the whole thing out because it would take too long. There's too many words there, but I'll just point out the conversation, tell people about it, and point out the value of the Discord and the value of discussions like this. And congratulate that person, Emily, as it happens, for having done such a great job at sharing themselves and knowing themselves. So this point here with regards to what type of person are you, and being able to identify if you are one of these types of traders will be helpful. Now, you might not be able to so easily just now. That's okay. It's understandable. Check out my first video in this series about rules and see if you can figure out some rules that you are following, some rules that you're not following. Take the rules out that you keep on breaking, add in new rules that do work for you. You'll start to figure out and get a handle on who you are as a person by looking at the rules which you set yourself and whether or not you're able to follow them. Because if you own your rules, then you will start to know yourself, and this is a good step towards becoming a better trader. Once you've done that and you've got comfortable doing it, having watched the video about, you know, doing things that make you uncomfortable, this self-reflection thing, it's going to make a lot of us uncomfortable. Let's get comfortable with being uncomfortable. Come back in here now you've overcome that fear and you're able to face yourself, because as Carl Jung says, you know, the knowing your own darkness is the best method for dealing with the darknesses of other people, and that is about being self-aware, and it's not an easy thing to do. Then you might find yourself wondering, well, what type of person am I, and is there anything that I can look to? Well, there's four major branches of trader personalities, and you may already fit into one of these. You may need to take the benefits and learn something from the other personality types, or your ultimate goal is to not necessarily be any of these four, but to have the combination of all of them together so that you get the best benefits of all worlds. But currently you might be perhaps the analytical trader, who's somebody who's known for being really detail orientated, analytical, very logical, methodical in your approach, rely heavily on the data and analysis to make trading decisions, and to perhaps sometimes find yourself over analyzing, doing too much, adding too many indicators, or getting distracted by them. So you might need to kind of simplify, to clarify and narrow down what it is you're doing, and take less steps so that you can increase your decisiveness if you're that type of person. So just to kind of balance these things out, you know, there could be the intuitive trader, and I think a lot of people out there would probably think that this is who they are, where they rely more on gut feelings and intuition than on data and analysis. And you maybe or as a personality type outside of that, you might be more creative or more spontaneous in your approach to life in general, and then specifically with your approach to trading, you might find yourself taking bigger risks occasionally if you're that type of person, in which case maybe you could learn a thing or two from the analysis trader, and the analysis trader could learn a thing or two from the intuitive trader. You might find that you are a patient trader. Now, the patient trader is the one I think that all traders would wish to be, because if there's one single truth from trading, it's got to be that patience pays more per hour than any other activity that you can take as a trader, and that being patient is of course the key to success, whether you're already in a trade and you're letting that winner run, or whether you are waiting to get into a trade and you're cutting down on the risk in that trade by not taking as bad an entry as the impulsive decision maker might take. But of course as well, you could find yourself being too patient. You might need to work on that decisiveness as well. The type of trader who's patient has a long-term perspective, is willing to wait for the right opportunities to arise. They tend to be disciplined and patient, and they may hold positions for weeks or even months. Or it could be that you hold positions for a very short period of the day, but you spend so long during that day out of a position. So somebody who trades in the 1 minute chart, who is a patient trader, might only have an active trade on for 20 minutes during the day, or less, but have spent 8 hours at the charts waiting for that opportunity to come along, which is the right one for them. It doesn't necessarily mean that you only take trades over the period of months. And then you've got that impulsive trader. So like the intuitive trader, you're going to take bigger risks, etc. But the impulsive trader, this type of trader, is known for making quick decisions without much thought or analysis, and being driven by emotions such as fear, greed, excitement, and are more likely to take on excessive risk. And that could be you. You might want to blend together these things so that whenever your analysis is telling you you've got a really strong opportunity, whenever your intuition lines up with that and you just feel like this is it, you've been patient in the running up to this, to taking the trade, then you might want to then look to the impulsive trader and say, hey, is this the time for us to be aggressive? And when you get all four of those personality types work together in lockstep, then you unlock a greater kind of version of yourself. But that's something to start with. Maybe you're in one of those four. That kind of covers most people. But you don't have to find yourself in here. You could straddle across two of them. You might be a bit of the patient trader who waits around a lot, but when it comes to taking a trade, you're just basing it all off your gut feeling, and you'll probably find yourself making a lot of losses and taking a lot of bad trades there, and you might want to learn a bit from the analytical trader, and stuff like that. So that covers most people. Great. Does anybody fit into that? If we say number 1 is analytical trader, number 2 is intuitive, number 3 is patient, number 4 is impulsive, which type of trader are you? 1, 2, 3, or 4? Let me know in the chat, and I'll just bring up this example. Here's a bit of chat, by the way, recently from before we move on to the actual example I wanted to bring up, talking about Occidental in the chat and how Occidental looks like it could have a Wyckoff distribution top on there, and just asking questions about this one today as well. I do think that if we check the chart on Oxy real quick, that it continues to pay out. This trade. It's doing really well. It's come down. I've obviously marked this on my chart for a reason in the past. I'll trust my own technical analysis. 56 is a reason there. That'll explain why one or two of my positions on this closed earlier on today, because I had take profit on them there. I'd already marked it on the charts. So you can see as well, out of those personality types, I was using the analytical trader, using the being a bit patient there, so personality type. Impulsive with this one, maybe because I've got a few positions on it, so maybe at times I took I made a too quick a decision on it or something, maybe, possibly. But the reason I got into this trade in the first place was partly based off of the intuitive element of me, how I was looking at oil a lot. So here's like some USOIL chart. I was looking at oil a lot over in this period of time, say from August through to December last year, and seeing the downward trend and thinking, this could continue down the way. We've had a death cross now. It's been resisted by the 50 simple moving average. It's dropped down a good chunk again today, hitting off of one of my targets, actually closing out the shorts that I had on oil as well recently. So whenever I saw this happening back in August or so, I realized that Oxy might be something to look into a bit more. And then, as we can see, that since August, it went in to put in another high, a divergent high on diminishing volume, and then had this downward trend happen. So you can see that I've actually used probably all of the types of traders there. Whenever it had come time to making a decision on this one, I for sure got in some shorts which were really excellent, and that's thanks to the sort of the impulsive element of me working in lockstep with the patient element of me, the analytical element of me, and the intuitive trader with me, all four of coming together in that particular example. And I wanted to show, though, that it's not all good, about knowing yourself, and that there's hard work to be done too. if I scroll up here, I can see in this room, crypto, we were discussing this, one of these things, because Nitrous M1 said, asked us about something. So I just wanted to read the original comment out here, because this deserves to be applauded, and this is to do with knowing oneself. Hi everyone, I hope I'm not going to read this all out, but I just wanted to read a couple of bits out of this out, and thanks so much to Nitrous for having shared this with us, and because this is all about knowing yourself, and also being, you know, willing to do that, face and look into that darkness that Carl Jung was talking about. I hope you're all doing well and having good weeks. I need to out myself again. It's just be real about what I'm doing. I'm still doing. That's so bad for my trading and mental health, because I can't seem to break my habit, no matter how frustrating it is to myself. I don't know if I don't think I'm worthy of keeping the money, or if I'm just stubborn, or I like to scare myself on a constant basis. And she's talking about how she hasn't been using stop losses well, but really looking at some, looking at this issue head on and trying to be self-aware. And she says here, I don't know what it is about getting stopped out that just gets me, but the alternative is actually really taking a toll on me mentally. And we discussed this and talked about strategies for overcoming it. And you have people like Hans Dampf in here saying they're just the same, Dragonfly saying they're just the same, and they're both with us in the chat of this live episode. You can see Hans Dampf in the chat box if you just scroll up a wee bit. So people, we have experienced this, and you know, I'm no stranger to the same thing. I went through the exact same thing that Nitrous is talking about there in my own trading journey, so I can absolutely relate to it. Not knowing why you're unwilling to take stops, what it is, and I tweeted about that today as well. So I'll just bring up my Twitter page and remind people that their Twitter is there, because I tweeted about this today as well. Let me get my profile up. This is me on Twitter, Rocky Outcrop. Well, it's not under, oh, it is underscore, yeah, it is underscore, Rocky Outcrop, Rocky underscore Outcrop. It's up there in the, there it is. So I said, what did I say here? I said, you're trading profit and loss. So you know that piece of your trading account that you can go to and see, you know, where your closed trades are and what profit and loss you made on them. They'll write the positive ones where you made money in green, and it'll put your losers in red. And the kind of psychological thing of having just an only green page there is really powerful. And I was trying to tell people that, you know, that's not necessary. You're trading profit and loss. You will reach a point where you have lost more money taking profit too early and too late than your stop losses. So if you have that feeling where you just like want every trade to be unblemished and perfect and not tarnished at all by having been stopped out, you look at your P&L page and you want it to be all just winners and all that sort of stuff, that type of thing is super tempting and also super dangerous way of thinking, because it's just, you know, it makes a psychological hold over you. You have to break that psychological hold it has over you. A list of green profit and loss numbers is really powerful, and it doesn't show you the truth, because it can't show the red that's within the green. It just comes back and says you made $100, but maybe you were down $20 before you made the 100, or maybe you were up $150 and you only took 100 off, and it doesn't say you made $100 but you could have made $200. It just says you made $100. So hidden within that green number is the inevitable money that you left on the table, and you're probably always going to lose like 10% of a trade's value leaving it on the table, in terms of not being able to call the exact top or exact bottom. Aiming to get the exact top and exact bottom is going to cost you more money probably than having a degree of understanding the dynamics of risk and how that changes the closer you get to these pivot points. So you know, it can't show that. So just change your thinking, start winning, embrace stop losses, don't mind about the cost of doing business. And big heads up, or a big shout out to Emily, who shared that self-awareness with us in the chat yesterday. She's great. So that's it. So I've come to the end of my section now, folks. Let me just check everything's still working here. I am still streaming. Yes, it's been an hour and 13 minutes, so it was an hour long sort of show there with self-awareness. Hopefully you've all got something from that, and it's now time to take a bit of questions. If anybody's got any questions, I'll take them. If you want to get anything, send me a message directly through the fax machine here, then that's great. It's really appreciated. Thanks so much to Win who super chatted $9.99. So if you find that you get value from these episodes that I put out and you want to send that value back the way to me, then I'll always be grateful to people who do that. Win has done it themselves today here. They're the only ones that's done it, and that's great. Thank you so much for that. So if anybody else wants to do that too, my printer's on and it'll take your message. There's links down below in the description. Of course, nobody has to. It's just that I really appreciate people who send me value back the way. It's really appreciated, and thanks to Win for doing that. Let's just see here. What do you say? This series has become my weekly trading tune-up. Thanks so much for offering development to other traders like myself. Great. You're welcome, Win. It's an absolute pleasure. And there's Win saying kind of thanks on behalf of not just himself but other people there. So that's good. You're welcome, buddy. So Komodosh asks here, do you subscribe to Mark Douglas' school of thought where you should take on all trades where you have an edge with an appropriate stop loss and, like a casino, let your edge play out over time? No, not really. The reason for that is because I'm in the stage where I'm at with my trading, and how I look at myself is I'm a discretionary trader. I'm not a systems trader. I'm a discretionary trader. I can use my discretion not to trade. There'll be Mark Douglas, for instance, would probably say, if you're there looking at the charts and it meets your conditions, you've got 2 or 3 different conditions that you would put in to use a trade, to take a trade, and they're all being met. Say it's something like the price is retraced to the 50 simple moving average on the hourly time frame, while on the daily time frame it's above the 200 simple moving average, indicating that you're in an uptrend, and you're wanting to take trades off the back of that retrace in order to take profit at your prior high, and that's just your system that you use, and that's how you trade. Okay, that's an example system that anybody could use. Now Mark Douglas would say you need to take that trade at that time, whereas I might be feeling sick that day, right? And so for instance, I'll say, no, I'm not taking a trade, right? Because there could be some other thing, because I know myself, and I know that I would break that system in order to get a better overall system for me, integrating me with the trading, because I know that equally that there'll be another time where I'm not looking at the screen because I'm sick and away off and I can't do it, and I need to make decisions as well about the level of risk I'm taking, the impact that the trading itself has on my own health, because cortisol, the stress hormone, is released when you're trading. It just is, and it can cause health issues off the back of it, things like that. I need to be aware of all these things. So I wouldn't. And besides, anyway, like kind of at the top of that answer, I said I'm a discretionary trader, whereby I make the decisions on my trades based on systems that could change from one time to the next. I might be using it might be a pattern that I'm seeing there. I might be doing a momentum trade off the back of seeing prices take a gap up and they look like they're running higher, that they've come back a little bit, but they're staying above the 236 Fibonacci retracement, and it's putting out a high and tight bull flag, or a low and tight bear flag. Then I quite often will trade them and trade that momentum, and then move on to another system afterwards, completely different system, where suddenly I'm looking at a trade and I'm thinking, oh, I'd really like a swing trade on this one. I think this will go really well for the next few weeks, maybe even a few months. This could be something that I would love to hold on to in my account for a long time, because who knows when it would stop. It's looking really good. It's in a healthy stage. It's stage 2 in terms of what stage analysis would say. The 4 stages, sort of the Wiseman chat. So I might be looking at that and thinking, oh, I really want to have that trade, having just done a trade on the 1 minute time frame that's a high and tight bull flag, you know, chasing momentum. So I'm not a momentum trader exclusively, and I'm not a pattern trader exclusively, and I don't just use one oscillator or one indicator. And then of course as well, I've invented my own indicator, and that'll, you know, at times I'll be saying to myself, oh, I want to take a trade on this thing because it's going back to that flash target, it's on its way, and know it's this is it, it's happening, and be taking trades and starting to kind of control that impulsive and intuitive side of myself by doing a bit of analysis, having a bit of patience, and choosing that entry, you know, and have to subscribe to a system which works for me in that situation, as opposed to me working for a system. Great question though, Komodosh. Great question. And I would like to point out that when I do introduce new trading systems to myself, I do subscribe to a lot of what Mark Douglas talks about. So one of the other things he talks about is whether or not, you know, you want to do this thing where we take all the opportunities, but also you want to do it over a period of time. So you want to take maybe 20 trades before you decide whether that system works or not. Not just take a couple of trades and then think, throw it out with the bathwater. No, there's times when you know, statistics includes those outliers, or you're going to have the things working outside of the standard deviation, or and it's whenever you include all of that together, you get your final statistic of this works 3 out of 4 times. Well, that could easily mean that it doesn't work 4 times in a row. You know, that could still happen in a system that works 3 out of 4 times. So I do give things their fair shot and everything else, and an awful lot of what he says I subscribe to, but there's not an awful lot of stuff that he says which is junk. You know, to be honest with you, I mean, if you watch the Mark Douglas video on YouTube, you'll see him tell a story about how he watched a trade get away from him, and it would have been the best trade in his life, and he's telling you this story, and you can feel his emotions in that moment in telling the story are real, and that he's still living in this moment of that trade that he had, that he regrets that he didn't you know, because he doesn't chase trades. But you got this woeful story that he tells about how awful that he saw that he would have made millions of dollars and he didn't take the trade, and oh my goodness, and that, and he's telling you to give you a lesson, but you can see the sort of the failing in his own trade in there in this very story that he's telling. So, you know, there's an awful lot of stuff he says which isn't, you know, perfect in that. But I do appreciate his lessons. Good question, Komodosh. Thanks for that. I appreciate it. And I see Nitrous dropped a donation saying 1,000,000 times thank you. Now, 1,000,000 times thank you, Nitrous. Honestly, absolutely wonderful of you. These things make this all possible, folks. You know, I'm here making this content, and I do it for people, and I hope to be able to grow the audience so that I get lots more of these things coming in, because I'd love to be doing this here and to feel that this is not just outreach, you know, and it's not just meeting my community halfway sort of ideas and stuff like that. That actually. I'm here, and I can look forward to Wednesday, because I think to myself, oh, that's great, I'll do my stream, I'll only do one stream a week, and I'll do my stream and I'll walk away from that with a couple $100, right? And I think that would be fair enough as an ambition to have that every week. I would walk away from doing my show with a couple $100 in my pocket, because it's a lot of effort that goes into making these things, and you know, whatever. So you know, I'm just straight up telling people that I think that's a fair enough thing. I think everybody in the audience would probably think, oh, that's probably fair enough, Rocky. Once that seems fair enough. So, you know, Nitrous making that possible, Go Win to Win making that possible. Thanks very much for you guys. I appreciate it. Tam says, oh, missed the live. We'll watch back tonight when the kids are sleeping. Just hoping to say hello and thanks, Rocky. I see you there, Tam. Thanks so much for dropping by. Leave a comment down below. If you get through to watching this here and you see me saying thanks to you later on and you're watching it, it's not live, but you put your kids to bed and all that stuff, drop a comment down below in the comment section so I can see that you made it back here. It would be cool to see that. Yeah, Nitrous says very fair at minimum. Thanks for that. Yeah, it is. I think it is fair. I think that's a fair enough thing. I think everybody watching the audience would also agree. So yeah, so that's my ambition here. If you all can help make that possible by you know, doing all the other things, if you're not willing to donate to the show, or use the Streamlabs donation link down below, or to do stream elements, or to do a crypto donation, or even a super chat, then you know, by introducing other people to the show, helping grow the community, doing a bit of outreach on my behalf, hitting the like button and the subscribe button and leaving a comment and making sure that you put in 100% watch time on the videos that I do put out, then you'll be helping, even if you're not willing to help me reach that goal directly. But I do appreciate it. Whatever anybody does. How you going? I care. That is why. How are you going? I care. That's why. That's good. I'm going well, if you're asking me. Let me just see what else is being said. Dragonfly says here, there's a lot of info out there. There's a lot to figure out. This game is very competitive, probably the most competitive. A lot of benefit to be taken from being part of something bigger than being one person. Yes, that's what I tried to create here. I wanted to create a system around me whereby I would be part of a rising tide, where everybody is helping everybody improve. And albeit people start off and they're not at the same level as me, if I treat them as equals, then it won't be long until they are at the same level as me, helping raise me up as I'm helping raise them up, and that sort of thing. And that's what I'm trying to do here, and it's very effective so far, so it'll keep being effective. You've got another couple of minutes here, folks, to get any questions in that you have. I'll be finishing this stream in the next 5 minutes or so. If anybody wants me to do any technical analysis on anything as well, you can also request that. Now, at this time, would be the time to do it. You can see Bitcoin here, the 2-day time frame, come back down to that 50 simple moving average. That's cool. That's cool. Just had a golden cross on Bitcoin. CME futures, not the other chart, by the way. For anybody that's watching is like, oh my god, what's he talking about? Yep, the CME futures chart has had a golden cross on Bitcoin here. We haven't retested it since crossing, but it's good to see that we've had it. The other chart had the golden cross back there in February. So, that's really positive, really positive for the price of Bitcoin, and then, of course, for all cryptocurrency assets as well. So if I just look here at the Bitstamp chart and look back the way to the last time there was a cross, where was it? It was the death cross, and the prices of Bitcoin, roughly when it was crossing, were up there somewhere between 42,000 and 47,000. You could have got in on a short off the back of that death cross. Here was a golden cross, which was rather short-lived, I suppose. September 21 did move up, so had lows following the cross down there at 39,000, went into highs at 68,000, so nearly 100% rise on that one following the cross. Here there was a death cross which failed, so this is a more or less a fail, but it did actually get a lot of downside. So if say you'd taken it at the time of the cross, 40,000, you could have got out at 29,000, so that's a decent trade. And we go back one more cross, and we can see this cross here, it worked out. So somewhere in around about the time of the cross, say you got in at a high, wasn't so great, say your entry was about 10,000, you're able to then get out at 60 something thousand. So going back to recently and seeing this cross here, either it doesn't work out that well, in which case maybe we say you got in at around about 19 and you got out around about 26, well done, blah blah blah, that's great, good trade. Or if we're going for a move which is more similar to one of these previous ones, you could see the prices of it going all the way up as high as 40,000 or so, just based off of that. So it's a decent thing. So there's a bit of analysis, just a little bit reminder. Drew's Tech, what a guy. And Komodosh, I've got a few other people who have donated here, so thank you so much, by the way, to that. Komodosh, thank you as well. You're great. Thanks for the thoughtful response. You're welcome, Komodosh. I hope I do think that I gave a pretty good answer to your question with regards to Mark Douglas. And I have got a great deal of respect for Mark Douglas, and I think that there's a few things as well which just to add to what you said, to what we spoke about, Komodosh. A couple of things, like Mark Douglas said, I think it was in reading Mark Douglas's book, and I can't remember which one it was he said it in. I think it was in Trading in the Zone, right? It was in Trading in the Zone. It wasn't the other one. Yeah, it was in Trading in the Zone. He talks about how anything can happen at any time in markets, and that's such a massive, important thing to fully accept. that and I don't know if Mark Douglas really went really quite as far as ever saying to people that it isn't about prediction, it's about risk management and stuff like that. He never, he never really, but he did get into he did thoroughly dispel notions of what you predict as being, somehow more likely to happen. Just, that's what that instead the job really is about risk management. So and one of the ways that he underlined that for me was showing this sort of anything can happen at any time philosophy. When he was talking about the sheer number of possibilities that can happen, when he went to a restaurant, he was talking to somebody saying, it's just a binary decision, up or down, buy or sell, but so many infinite things can happen. How fascinating that is. But also in terms of the other story, the anecdote he tells about when he was in an office with a trader, and he says, he's relaying a conversation he saw happen where somebody says, it'll always bounce off of this line, this is great support, it's going to be support. So then the trader picks up the phone, he says, sell 100 lots or whatever of this thing, and then it crashes through support, and he says, well, I just did that. If I just did that, then anybody could do that at any time. And it just reminds you that there's some really, really great lessons in there. Oh, you donated that twice, maybe, Komodosh. If you did, then thanks very much. You might have just printed out twice. Really appreciate it, though. And if you meant it, then even better. So cheers for that. Drew's Tech, you're always great. Thanks, Rocky. You say, I'm loving the psychology talks. Drew, thank you so much. Really appreciate your support, man, as ever. Corman donated $10. Thanks a bunch. Rocky, the Rocky Outcrop Flash Indicator, such good value. Also, take the course to better your edge. Way, thanks so much. And those are great messages to share with people. They absolutely are. They absolutely are. They're doing the Rocky Outcrop Flash Indicator. It's $100 per month. You can get it through my Patreon, and I'll soon be putting the price of the Discord up to $80 a month, by the way. It's $50 a month to be in the paid side of the Discord. $50 a month, it's not very much. And it's soon going to be just $20 less than the price of the indicator tier. So be moving that up. The ultimate goal will be just to have one tier where everybody, gets the different benefits, and that it's maybe $150 a month or something like that, and everybody gets the indicator and membership to the Discord. And I'll discontinue all the different tiers that are there below that and make it just simpler and just one thing that you can decide to get or not. But currently it's $50 a month if you want to get that, and whenever I change the prices, it doesn't affect the people who are already on a particular subscription level, by the way, folks, just so you know. So thanks so much, man. That's really appreciated. Let's bring up OTLY real quick, because I can see KT in the chit chat box saying it's something to look at. It is what it is until it is what it isn't, folks. When you're looking at a trend on something, this is what's known as a downtrend, signified it's visible in the way that it has this oscillation in price, which just continues to take it down lower. So things are what they are until they are no longer what they are, and currently they are in a downtrend. But we've got a few key differences, don't we? We've got a few key differences, as we can see, right up until here. We had a downtrend where we're always below the 50 simple moving average. Then we just tested that, and now we're back below it again, but we could be finding ourselves moving out of that area. So that's something interesting. We tested that today, KT, and it didn't actually successfully push above it. So we really do need to see this thing up above 232, and that's going to continue to go this way just for now. Well, actually, while the prices are below it, it'll stop going up, but it's going to be in it around about this level. So when we take out 230s, then we're aiming up towards currently 270s, and then it's then we're on the way, then we're flying. This is a bit big for me to be saying it's a bull flag. It's a bit of a bull flag, but this here would have been ideal. It's still a bull flag, but it's starting to be more like a channel or a rectangle, where you wouldn't necessarily expect that much, but we can measure it anyway and see where roughly this would take us to if we did go up about the $5 area. However, it is what it is until it is what it isn't. So until such times as it's, we see something confirming this as being in an uptrend, then we're going to need to say that it is it's in a downtrend, which means this whole area below here very rapidly could get filled in if we did drop down the way. So I would be very inclined to remind people that risk would be being managed by the markets in around here, which is likely to be tested because of the liquidity that would be on offer. But if you were patient and waiting for an entry, that the price to get into, if you believe that we're going to put in a higher low, that is, it would be somewhere in around about 165 down to as low as the lows down there at 135. So that zone there would be much better for entries than here if we break in this area. So let's kind of throw that out there as an idea. So we can dip down below it, but we need to come back up of it again within a day or two to be satisfied with this. I'm looking at this in a daily time frame as opposed to sort of shorter term things. It's not the immediate thing, so this could happen over a period of time, but that would be ideal to get that if it got out of there again quickly. But if it doesn't, then it doesn't. It's below the 50 simple currently. It has potential for a bull flag, but it's not ideal by any means. And yeah, and it is what it is until it is what it isn't. If it does start trending up the way, then we'll be doing good off the back of having already taken out the 236. Is that fair to say? Are we too soon? It might be a bit tight there. Yeah, we did take it out quickly, but we obviously fell back down below it again. So really, yeah, when the prices are below 270, it's hard to be properly bullish on this, but you get 2 for 1 at this point, getting above the 200 simple and above the 236. Then, of course, everybody would regret not being in it sooner. So I'm not a financial advisor, not here to give anybody financial advice, but if I was trading this myself, I'd be thinking to myself, I would only get into this if I was willing to manage my risk here. If I was the type of person who just holds on to a trade and doesn't take a stop the way that Emily was saying about herself recently in the chat, then I would have to be very, very wary of taking a trade there for the ability for this to drop down the way. And would sooner go and talk to the patient side of myself to wait for this to actually start trending. Even if this puts in a low. So the regrettable thing about this putting in a low is when you feel that FOMO and you think, oh, I wish I'd got in down there at one of these lower times, is that when the price then moves up, then what you'd have here is number 1, number 2, number 3, and then on to number 4. And it's only after you've got these two components, where you've got a higher, when you're putting in higher highs and higher lows, that you've got a proper trend on the go. So right now we don't actually have that trend in this time frame. Nevertheless, it does look like it could be like it could absolutely go for it. It could. I'll bring up XPENG to kind of show you one of the many charts that's like this. How this movement up followed by this here, right? And you're hoping that it doesn't break down at all, but then you see just here that it has. Why? Well, because there was liquidity issues in here and it wanted to fill in the American equivalent of this stock gap. So this is what we're talking about. Did it do it? I asked the chat yesterday in the chit chat and Discord if this would happen. It has happened today, so it's done. That's absolutely fantastic. So and now we're in with a bullish engulfing candle. So this kind of had to happen, we're waiting for that to happen, and now it has. So that's a sort of similar sort of scenario over in the other chart. Just doesn't have that visible gap for you to see. Instead, it was a fair value gap that I was talking about. Anyway, that's a help. Hopefully that's a help. And I'll just check in here and see then with the chat one last thing. Anything can happen at any time was definitely my biggest takeaway. The trader selling into support example was fantastic. That's right, Kamodosh, it absolutely was. I've been trading AGIX lately, but all crypto are just tracking Bitcoin. Would you say it's most beneficial to do TA on Bitcoin and then the individual TA coin you're trading? Yes, but no. That's not most beneficial. No, that's putting too much emphasis to make it seem like there's a specific right way of doing things. You'll find ones which are more and less correlated, and I don't know what any given one is at any given time. It depends on your familiarity with it. So if we bring up Bitcoin USD, this is answering Nitrus's question in the chat. She asks, is it most beneficial to do your Bitcoin analysis before trading an altcoin, or what really, and I'm saying no, not necessarily. So here's Bitcoin's chart currently. Then you've got other coins out there like LINKUSDT, and you can see it's been in a much more sideways for this period of time. So it's slightly different, you know, and you can see the way that the 200 simple and the 200 period moving average here, 50 simple period moving average, 200 are showing us, you know, this snaking around that they've been doing, but they haven't quite crossed until just recently. Very thorough retest, and now we're bashing off that there. So I'm really curious as to whether or not Chainlink breaks above the 50 simple here and stops being below the 200, and you can see the slight differences. So, you know, you can, and I'd just say to Emily who asked that question, that there is the total chart to take a look at. You can do analysis on this. This means you're kind of doing both of them at once, and you can then do things like look at total 2 and see what the delta is between the two of them, the difference between the two of them is, because this doesn't include Bitcoin, this is all the other coins, and it includes Ethereum though. You can look at total 3 and see all of them without Bitcoin or Ethereum included, for example, and that, you know, so like this is the other things you can look to. So there's more than just that. So there's a couple of questions answered for the chat. Carmen, thanks so much for that. Covered OTLY for KT. Trace one says it doesn't affect grandfathered accounts. That's right. All the chat I had earlier on about people, if you do join up to the paid section of the Discord, know that that's you for kind of for life, so long as you maintain that with Patreon. If you cancel it, then you'd have to join up to a new to whatever levels exist at that time. So yeah, so that secures that. And wow, delete yourself, $50. Oh my goodness, delete yourself. Thank you so much. That's really, really great, kind and generous of you. Thank you. Really great. Goes great with these other ones that have come in. Great being able to catch you live. Thank you for being here. Rocky, thanks for your shows these past weeks. They're invaluable to me. Could you take a look at GME if you have a chance? Pardon if you already had this stream. Cheers and appreciate it always. I'd be absolutely delighted to do that. And then that will call an end to our show. So I'll just extend a big thank you to everybody for tuning in who has tuned in so far, and tell you all I appreciate and love you all very, very much, and how I'm looking forward to coming back here next week and continuing on with the theme we've had recently. I think a blind man could see that there is the potential for this to be putting in a bit of a tasty little double bottom for us just now. We'll just have a quick look and see that as this price has descended down this period, so we're looking in this section here at this piece of volume just here, we can see that the volume is also descended. So this is you know, let's just be clear, right? This is downward trend, that's pointing down the way. Is downward trend. So it is what it is until it is what it isn't, and a few things that would start to give you ideas. So let's make a list of things which are not a downward trend. Well, a rise from here would make this into a double bottom. So a double bottom. So that's one thing. Is the volume diminishing, or is the volume increasing? Right, the volume should be increasing to go in line with this. Or is it diminishing? Well, we can see that it's actually diminishing as the price drops, so it's not increasing volume. So what we're looking for here, if we did get a movement down, would be for volume to be higher and to change this, because this would be a change compared to our structure. So we'd want to see volume change then to kind of go along with that and to increase, which it should do, because buy stops should exist in this area. Now, if it drops down a wee bit and it doesn't increase, then it means that there was no real big buy into this when it comes back up. Neither was there anything really for it to buy through on the way down, and it's just kind of doesn't give us a signal, which in itself is kind of like a signal, but it's not giving us a signal. But so here we have so there was that aspect of the double bottom. The double bottom, then you've got the volume. Those are both bullish things. So that's a tick, that's good. Now, between these two areas, is there divergence? And there will be, right? And we can see here that we've got this upward slope on the RSI, while the prices are putting in lower lows, right? So during this period, low 1, 2, 3, 1, 2, 3, and it's gone up the way. So we've got divergence as well. So we've got divergence. So we've got three things, which are three good things. So if we were looking for a chart pattern to confirm our idea of the chart pattern with volume, and then to confirm the idea of this with an oscillator saying it's divergent, very, very good. Okay, so what could we aim to then? Well, a couple of targets. One is our prior high, so we could aim up towards 22.22. Then we could aim towards the next one, which is 27.30, you know, whatever, 27.30. 27. So that would be in there at the 200 simple moving average, and that's a good start for now. You know, that's a good start for now. Then afterwards, what we want to have happen is certainly not a triple bottom, you know, because that would just turn this into an expanding megaphone pattern in here. So we want to avoid that. And what you want to be able to do is to work out the scenarios that we might be in. So if we come to here and then reject, what we're doing is putting in a descending triangle pattern, right? If we come to here and then reject, then we're putting in this rectangle pattern. If we come to here, off the 200 simple and then reject and come back down, then we're putting in this broadening pattern. Okay, and like that's all good and all, but what we want to be doing is putting in what looks like, you know, this here to turn into more of a or, you know, if we go up here and we reach this high, then we're putting in just a W pattern, and this would be a negative one that could take us down to targets such as here and so on. So what we want to do is to break past this region and to not come back down far at all, okay, afterwards. So when we come up towards the 200 simple, we certainly do not want to see a triple bottom on there. We want to stay above the 50 simple moving average thereafter, have this look back as being the low to have got in at, be able to say that it's trending up the way, because then what type of pattern you're putting in is an upward channel, and that would be much healthier as a way out of this zone than where we've been recently. Okay, so there's some technical analysis on GameStop. It's helpful if you're waiting for a third thing to confirm this to move towards the top side. Then maybe you'll wait for a cross on the MACD on that down there. You might look to other time frames to enhance your analysis as well. Right, so yeah, that was actually a fairly big donation of that $50. So I suppose I should just take a look at the other time frame myself and just see what we can see. It's not crossed there. This low is lower than this one so far. So it's not divergent there in that time frame just there. So it's quite dodgy. So could we see, so personally for me trading this, I'd rather buy it just here, right, and to put my entry where my stop is, and then it makes it easy to stop out when you know that you're wrong, because you're so close to being wrong anyway. If you initially think to yourself like, oh, I'd like to have a position on this one, I can't remember where there it is, long position. So say you thought to yourself that it was going to go up from there, so you thought you'd buy it just now, you're going to have to manage your stop below, like, you know, that wick over there, and you know, you'd have to take on that much risk. Obviously, I'd rather buy it in this region. It makes the risk to reward off of any upside potential way better by having taken it down from, you know, from a buy there to here. Nevertheless, if we push up and we take out the high of yesterday's candles and we start to, you know, we actually, you know, put in some decent price action, then great, you know, that's great. We'll have a bit of momentum to run with, and we might see something like on a lower term time frame, one of those high and tight bull flags that I spoke about, to be able to move on up from afterwards. But you know, just to be aware that if tomorrow's trading session didn't start with momentum and so on, and it was failing and it started off within the bounds of the last couple of days, I would sooner buy at the liquidity in that zone than up the way. But this is just talking about my own personal preference to making trades in and around about double bottoms under those scenarios. Okay, cool. So I've covered that. OTLY had earnings out today. Did it, KT? Right. Excellent stuff. I wonder if they were positive as well. Yes, they were not. They were not. They were the opposite type. They were a surprise 50% lower earnings than they'd expected per share. That's pretty bad. But it did have a bit more revenue as you'd expect. It's not suffered. It's not done well with inflation. If oats themselves rise up, then it'll struggle with inflation, you know. So would have rather have seen it trending positively during the time when oats have had a harder time. Instead, all it's managed to do is sideways. Interesting stuff. I suppose it's priced in those earnings a good deal, though. This is like your better improved revenue, and then since here this is like the earnings being priced in themselves, or the earnings per share being priced in for the earnings. Anyway, that's where we are with that one. Thanks so much for everybody then for tuning in. Delete yourself. Thank you. Thank you for the donation and for the idea to look at GameStop. It's been nice to check in with GameStop. It's been a while since anybody's asked, so that's cool. Thank you for your support of the channel, and thank you then to Delete Yourself. Thank you, Carmen. Thank you, Drew's Tech. Thank you, Komodosh. Thank you, Nitrous. Thank you, and Go Win to Win, who are the sponsors of today's show. And I'll just play the credits as we bring us into the end of the show. There we go. Hopefully. Thanks for watching, everyone. And another shout out again, I think it was to Go Win to Win, who bought other people memberships. If I'm right in thinking that you did that. Somebody did. I hope it was yourself and I got the name right. So Homer's Ghost, who celebrated being a member for 8 months. Thank you. KT, J Fern, KE, part-time player, and Aaron. Welcome back to your memberships of the show. You've all been members in the past. Hopefully you decide to become members again when you see the quality of the stuff in the YouTube education playlist and all the good things that I try to do for the people who are members of the channel, and all that good stuff. And thanks to everybody who supports me through watch time and likes and bringing friends along to watch the channel as well. Remember, a friend of yours is a friend of ours. We are the rising tide, creating an environment, a community around us of traders who disciplined, deliberate actions towards becoming a better trader all the time in order to improve ourselves and improve our trading profits and losses. And while the journey ultimately has those selfish ends for everybody who wants to improve their own financial success, we know that we'll get there sooner and be better for it if we bring everybody across the line with us. So what we're going to do here as a community is raise everybody up, and everybody will win together. Thank you for being a part of that. Thanks to TradeSpotting for all your support that you give me, and for and putting that flair in there at the chat. Member for 20 months. Thanks to everybody for supporting the stream, and I will see you all again next Wednesday. Do tune in for it as we discuss in the next stage in your trading development. See you then.